Hey everybody, and it's time for Milkshakes Markets Madness. Woo! The markets have been a little underwhelming, so I'm trying to spice things up with that silly intro. Brent, where do you want us to start? You made an interesting comment to me before we hit the record button, and that is, in order, if I wanted to buy Nvidia, what would I need?
Well, you can't buy Nvidia without buying dollars first. You have to have dollars from somewhere, and I don't know whether you earned them, whether you've saved them, or whether you have to buy them on the foreign exchange market because you live overseas. But if you want to buy Nvidia, if you want to buy the Nasdaq, if you want to buy technology, most of the growth is coming from the United States, and if you want to be part of that, you need dollars. And I think that's largely explains why markets are doing what they're doing. You called this out, I don't know, 2 weeks ago, a month ago, and because I have been cautious. There's a number of reasons that I think warrants caution. But I've also said, we've remained long because, we in the long term think equities are going much higher. Part of the reason we think equities are going much higher is we think capital from around the world will flow into the U.S. And I think that's largely what's happening. As of right now, we still have a lot of liquidity in the U.S. There's a lot of liquidity outside the U.S. that flows into the United States because the United States markets are continuing higher while many other markets are not doing as well. People hate FOMO. They hate missing out. And, again, if you want to be on this train that's moving higher, you got to buy dollars to do it. And, I think that largely explains why we're seeing what we're seeing.
So I hate to do this to you, but can you inadvertently did it, but can you describe what the dollar milkshake theory is in 90 seconds? I mean, you obviously said this so many times, but what's your shortest version of it?
Sure. The shortest version is really we could probably use Soros's imperial circle as the way to describe the milkshake theory.
What is
And
his empirical circle?
So Soros basically said the typical response to a rising currency is that asset prices will fall, because typically when a currency rises, that it puts deflationary pressure on everything. Deflationary pressure is a headwind for equities or risk assets, and then they typically fall. But Soros, back in the 80s, kind of said, that is in general true, but there's always exceptions. And one of the exceptions is when you have a country or an economy or a government, however you want to define that is running tight monetary policy with loose fiscal policy, you can get into a situation where strong currency strength sits alongside economic growth and asset price appreciation. And the reason is, for a lot of the reasons that I've described with the milkshake theory, is that if you want to be if a government is going to spend a lot of money and really juice the economy, that is a tailwind for asset prices to go higher, right? And so not only the people that live in that economy might want to be part of it, but people who live outside that economy, outside that country, might want to be part of that growth. And then if you're simultaneously running a tight monetary policy, which means typically you have higher interest rates than the competitors, you kind of get a turbocharge on your money, because if you're sitting somewhere that has 2% interest rates and the economy next door is growing but also has 4% interest rates, you can put your money into that other country. The currency of that other country appreciates versus yours. You get paid a higher interest rate to be sitting in that currency. And then if you want to, you can step out a little bit further on the risk spectrum and buy equities or buy real estate or whatever it is. And so you can get a situation where currency strength and economic growth and it all kind of goes together. Now, typically that doesn't last forever. You typically come to the end of that cycle and things turn down. But in the moment, you get a situation where currency strength and economic growth begets more currency strength and more economic growth. Eventually, you hit the end, and then you get the vicious cycle the other way. But this is kind of the benign circle versus the vicious cycle, right? And so that's largely the dollar milkshake theory. Again, for many reasons, I've said this many times, some of them deserved and many of them not deserved. The U.S. has many advantages that the rest of the world doesn't have. The U.S. can run higher interest rates than the rest of the world can. And as a result, that draws capital in the United States. Not only that, but we have the biggest economy and the biggest consumer market. So other people want to sell into our market. And, like it or not, people around the world see the U.S. as a relative safe haven. And so this is a place that attracts capital. You might look at our political system and say these guys are crazy and it's downhill from here. And it would be hard to argue that. But the problem is you look around the world and it's not that much better anywhere else. And so on a relative basis, things look pretty good in the United States. We have a rule of law. I know people will say, the rule of law got thrown out the window a long time ago. Okay, fair enough. But it got thrown out the window of the other countries a lot longer before than that, right? And so again, on a relative basis, that capital gets drawn into the United States. We still have higher interest rates than many other places around the world. To operate on the global stage, you already need dollars. So then buying treasuries or buying, risk assets in US dollars, it's a natural progression, and you get to make more money while you're doing it. So there's a lot of reasons that I think in the years ahead, asset prices in the US and the dollar go a lot higher. And I think that's largely reflected right now. And here's the other thing is people say, but the Fed is going to cut. Okay, probably so. I mean, the Fed has been pretty clear that that's what they intend to do. Now, whether they are able to do it to the extent that the market currently believes, I think that's a whole other story. But even if they cut, we're not going to get into a situation where the United States is cutting dramatically and the rest of the world is running tight monetary policy. And if that does happen, then that will just extend the game. That will keep the dollar as the global reserve currency. That will keep things moving. If they go back to QE and the dollar goes down, that's a tailwind for risk assets globally, right? So that just gives us another global easing cycle. I think that's the right way to look at things.
I appreciate that explanation, taking a slightly different analogy and applying it to yours with the milkshake theory. So I think, your framework on that, when people look at it, it's largely based on markets and asset prices. And the idea specifically is that there's going to be this standoff in the end in terms of the global reserve currency being the US dollar and what many people see as hard money in gold, and that eventually gold will win. But what was interesting in terms of like the journey to get to this final battle, you just described the environment where you have both a loose fiscal policy, so government spending, whatever it might be, relative to that to kind of ease things socially, even economically. And then on the monetary side, things are a little tighter. So example is right now where we have the Fed aggressively raising rates over the last 2 years. And you said you referenced it as potentially kind of a Goldilocks scenario for this dollar milkshake, this sucking of capital into the US. Now, as that eventually leads to maybe this final battle where, the dollar dies, or everyone's waiting for this apocalyptic moment or a great reset, what's interesting to me is I always imagine there's this, it feels apocalyptic. Like it feels like we're at the cliff, we're heading to the end, and then boom, goodbye the dollar and gold takes over or whatever it replaces it. But what's interesting in what you just described and what we're now actually living through right this moment is it is a bit Goldilocks, right? You have not only an environment where capital is flowing into the US, but not because of the safe haven nature of it, like shit's hitting the fan, so we're going to own dollars, but it's mainly because everything is ripping higher and the economy is strong. It's an interesting dichotomy I didn't consider would be the case.
Yeah, and here's the thing is I think it is kind of a pretty interesting time because there's a lot of people who will say, just because the stock market is higher doesn't mean things are good. And this is not a true reflection. The stock market is not a true reflection for how things are. And the first thing I would say to that is you are absolutely right. And that is the dollar milkshake theory. If you go back to the very first time I talked about it, this is 5-6 years ago now, I said, don't buy U.S. equities because things are good. Buy U.S. equities because things are bad and they're going to get worse. So if you're saying things are worse now than in 2018, fine, I'll agree with you. I don't feel the need to debate that. But this is the dollar going higher. This is U.S. asset prices going higher. This is gold going higher, despite everything being bad, right? And so, you did a good job of identifying this. I think again 3-4 weeks ago, saying, Brent, are we in the middle of the milkshake? And you keep thinking that we're going to go lower. And this is my point: is I'm all about having hedges and having protection on the downside, but I don't feel the need to go all in short this market either, because while I certainly think that it probably is due for a pullback, and I want to be protected against that, I think largely what we're seeing now plays out on an even bigger scale in the years ahead. Now, that doesn't mean there won't be terrifying drawdowns along the way, as I also said, back at the beginning. But I kind of feel like that's where we're in. And the other thing I'd say is, I meant to say this a few minutes ago and I forgot, is even if the Fed does start a cutting cycle, we're not going to be in a situation where only the Fed is cutting. The Fed would be cutting because the global economy is slowing down. And, in that situation, Europe's going to probably have to cut. Japan probably has to cut, or, Australia or Canada, or whoever it is. So again, and the U.S. doesn't have to have the tightest monetary policy, but if it just has tight monetary policy on a relative basis, even if it's getting looser, but it's still tighter relatively to, again, it's a relative world, right? So in that, a situation where the U.S. has the tightest monetary policy, but everybody is easing, including the United States, that is the ultimate milkshake. Because that's where everybody, the whole world, is providing new liquidity. They're printing money, they're doing stimulus, they're doing bailouts. But all of that stimulus that's being provided gets sucked up into the United States. So, again, I don't know that this is exactly how it's going to play out. The only thing I'm certain of is I won't get it completely right. I know that for sure. Nobody gets anything completely right. But, so far, I haven't really had to change my tune, because so far it's played out largely that way. And I just don't see anything on the horizon that's going to largely change that. And, and if it does, I'll have to pivot at that time. But so far, it seems to be working.
Is the milkshake fractal? I mean, is NVIDIA like the milkshake of the equity market?
Sure. That's a good way to look at it. Again, part of the thesis too is, I've used Mike Green's passive investment as I've said many times, I credit him with making me realize the power of passive, and that will affect this as well. And as NVIDIA goes higher, the indexes have to buy more of it. And then that itself pushes it higher. That makes it even, and believe me, FOMO is an incredibly strong thing. And so then that makes other people want to buy it. There will come an end where it will pull back, and that's actually, I've had several people say, Brent, your milkshake theory is a great way of explaining things, but you should have called it the Bitcoin milkshake, because Bitcoin's going to win in the end. And, I don't think that's the case, but, maybe it will be. I don't know. People think I hate Bitcoin. I don't hate Bitcoin. I just don't think it's going to take over the world. But listen, even if Bitcoin, let's say in the years ahead, the DXY goes back to 140, 150, the Dow goes to 60,000, gold goes to 5,000, and Bitcoin goes to 250,000 or whatever your number is, I wouldn't say that I was wrong. I would say that, I was largely right, and Bitcoin did incredibly well. It's just an asset that, participated in the move higher. And if that's part that I get wrong, so to speak, then I'm fine with that.
Well, it's a good pivot to Bitcoin, because we're seeing this. I think one way I'd present this is, we have, especially I'd say over the last couple of months, as the Fed has kind of ran out of gas in terms of rate hikes. And so it felt like, they were done. We could kind of look back at the job that they have done. And we have given credit to Powell that he's been able to raise over 500 basis points in a short period of time, not crash the economy, and kind of be right in this little bit of a limbo land. Now, I think at the start of the year, I think we kind of kicked off by giving some reflection on that. Now, 3 months into it almost, I feel like they've got to be a little aggravated by this. I mean, you've got equity prices ripping. Bitcoin's, move in price might have a little bit to do just because of its small float or supply, and you get a little bit of reallocation with the ETFs. It's going to skyrocket price. But irrespective of why that's moving, how do you think, the central planners are trying to deal with this, regardless of what PCE or CPI says? And they haven't even started cutting to rebalance out real rates, and asset prices just won't give them any room.
Yeah. So I think there's a couple things here. I think the first thing is, it's important to remember that central bankers are just people, and they are subject to the same, emotions and passions and mistakes that all of us are. And in many ways, they're probably more prone to it because they think they're not, right? They think they're infallible. And one of the things I've kind of changed my mind on over the last kind of year or 2 years is that I think when Powell started the hiking cycle, I think that he thought he would have to cause a recession to get inflation under control. And I think somewhere along the way, he changed his mind on that, and I maybe did not pick up on it right away. I think as he got closer to markets being back at their all-time highs, and he got closer to inflation at least being under control, not gapping higher. Even if you don't believe it's falling, it's not gapping higher the same way it was a year ago. And so as he has, at least in his mind, gotten inflation somewhat under control and has been able to do it with unemployment remaining low and asset prices remaining high, I think he probably started believing the bullshit a little bit, if that's the right way to say it, right? And, you know, it's a funny thing. Like I've dealt with this several times with other people because I've worked with a lot of people who have made a lot of money on an individual stock or on an individual investment. Because the way you get rich typically is you take a lot of risk and you're very highly concentrated in one thing. The way you stay rich is you diversify out of it over time. But over my career, I've worked with many people who had a very large position in a single stock, or, you know, Bitcoin would be a good example now, right? Is that when you're in something and it does well and then it pulls back, you're always like, God, I wish I would have taken a little bit more off the table. And then you say, if it gets back to where it was, then I'll take a little bit off the table. But then when it does get back to where it was, it's like, well, you know, things are going pretty good now. They seem to be on the right track. Why don't we let it go a little bit 10% higher, right? And so people always change their mind. No matter what they say, they always do. The person who actually comes up with a plan and sticks to it, they're typically more successful than everybody else because nobody else has the discipline to actually do it. And so I kind of feel that this is a good example with the Bitcoin. I'll use Bitcoin as we were talking about. You know, when Bitcoin was at 60,000, there was a lot of people who had made a killing. And then when it went to 20,000 and 14,000 or whatever it was, 17,000, I'm sure, and they won't admit it now, but I'm sure someone's going to say, God, I wish I would have just taken a little bit off the table. And when it gets back to 50 or 60 grand, I will. But I would almost guarantee that a lot of those people who said they would take some off the table if they ever go back to 60 grand are now putting more money into it. Because there's new catalysts. Oh, things have changed. You know, we have an ETF now. You know, it's becoming more accepted. There's a, you know, I can hear them coming. There's no reason to be bullish. The Fed's going to start cutting. So all of the reasons that didn't exist when you told yourself, I will sell some the next time we get back to even, they exist now. And you're like, well, these are new catalysts to push me higher. And they've forgotten all the risks that made it come down to begin. So I kind of feel like maybe the central bankers are susceptible to those same things. I think initially Powell thought he had to cause a recession. I think as they went along, he realized, well, maybe I don't have to. And now, you know, he's got inflation again, in his mind, he's got inflation under control. Unemployment's low. You know, we've got asset prices at their all-time high. What's not to like, right? You know, capital from around the world is flowing into the United States. You know, he has done the impossible. Nobody thought he could get a soft landing, but yet now the market wants to give it to him. Not only has the market gone from saying, you can't have this, they have actively said, we want to give it to you so badly, right? And so I think he likes that, right? You know, I don't think anybody likes being the bad guy. I think everybody wants to be the good guy. Some people are willing to be the bad guy, but I think most people like being the good guy. So I think there's a little bit of that going on. But the risk here is that Powell doesn't stay disciplined, right? Doesn't stick with his plan, starts to really believe this stuff, and it gets away from him again, whether to the upside or the downside, you know, or inflation rears its head again, and that causes it. You know, I don't know, but it's in these environments where not only investors get complacent, but monetary authorities get complacent as well. So, you know, we all know that it will end someday. It's just whether does it end next week or 2 years from now. That's what makes this interesting. Nobody really knows.
Well, good take on that. Just as a reminder, everybody who thinks Brent is short the entire market, Brent is riding this wave, just maybe not as aggressively as some of the Bitcoin maxis are. One thing I'm curious on, and this might actually lead us into somewhat of a political pivot, but looking at the U.S. from the government side, the interest rate thing is interesting. I mean, the Fed. The Fed's going to dictate, overnight lending rates and do different things with repo markets, but interest rates, as far as what the U.S. is funding itself on, is going to be based on how much of the supply the market's willing to take down. Do you have any concerns or issues in terms of the fact that I think we're both comfortable, and most people are, that the government's not going to stop spending more money? But how do you think that the fiscal end of this, especially if they see some sort of correction and need to step up, government spending, how much of that do you think is an issue as far as inflation and just, the market stability at this point?
Well, I don't think they're going to stop spending. I think they are more. I think, if anything, I think the budget deficit will be exceeded. It'll come in over budget rather than under budget. And I want to be careful I say this, because I don't want people to say I'm changing my tune. I'm not worried about there being failed treasury auctions, and I'm not worried about it being a situation where the U.S. can't fund itself. But I do think it's very possible that yields go higher on the 10-year or the long end. And again, I have several friends who believe that we are just moments away from a deflationary crash, and that long-term yields are going to fall because they must. And I completely get that argument, and I don't rule that out. I'm not willing to play. I don't know. So I'm not going to play that end of the curve. But, we've said many times that these higher rates, until you hit the wall, they're somewhat stimulative. I think we're seeing that. And I think that, so I think it's possible we don't hit the wall next week. Maybe we do. It's already overdue from what I'm seeing, but there's nothing that says it has to happen next week. And if we've got a situation, either because the market's going higher and the Fed wants to, and that's putting inflationary pressure on the market, and the Fed or the government wants to spend more money, I think that could put pressure on the long end going higher. We could also get into a situation where, again, I want to be careful I say this, because people will say I'm switching my tune. I'm not. It's not that I'm worried about the Treasury not being able to fund itself, but there's nothing to say they might not have to pay a higher coupon to do it, right? And so I think that's possible. I mean, ultimately, the whole milkshake thing is when sovereign bonds all over the world get rejected, not just the U.S., but all over the world. And so, we talked about this late last year. If long end of U.S. treasuries have to go higher in order to accommodate the huge demand that they want to issue, people will say that's horrible for the United States, because interest payments are becoming a huge part of their future cash flow needs. Okay, fair enough. That is true, but it is a nightmare for the rest of the world. If you can buy a treasury that's yielding 6 or 7%, and you have to have treasuries to operate on the global stage, then you're not buying Egyptian bonds, you're not buying South African bonds, you're not buying Italian bonds, you're going to buy treasuries. So U.S. yields going higher on the long end actually draw capital into the U.S., and it deprives the rest of the world of that much needed liquidity. So if that were to happen, I don't think that's uniquely bad for the United States. In fact, I think it could actually be, on a relative basis, better for the U.S. than the rest of the world. So I'm not really sure what happens with the long end, but I'm certainly not in the camp that says the interest rates absolutely 100% have to go lower.
Well, and on that vein, you've also highlighted many times or made the point that there's just what is the acronym? TINA. There is no other alternative, and that seems to be kind of the ongoing issue. And when people get excited about the BRICS, one of the arguments you make is, like, even if this is a viable solution, you're not going to see businesses, sovereigns flip a switch and shift over to this overnight. So kind of with that in mind, you can pick up on that. But I'm also curious, when you had this dollar debate a few weeks ago, and that video is on our channel as well, I felt a lot of emphasis from you highlighting the influence of the industrial military complex. So I'm not sure if those two pieces are things that you want to combine together or look at them separately.
Well, this is such a hot topic. It's such a taboo thing to talk about. But I mean, ultimately, if I just, I try to be hyper rational about this stuff and try to be unemotional about it. If I just completely remove my emotion from it and I step back and look at it, like the military industrial complex is a real thing and it wants to get fed, right? And every year they get more money. How do they get more money? They say, holy crap, these enemies of ours have advanced at such a rate we cannot possibly compete with them if you don't give us another $800 billion. Meanwhile, that enemy that they're talking about spent $80 billion. And so, the Pentagon needs to spend 10 times in order to compete. And, the thing is that they want to replace these weapons and these tanks and these planes as well, right? So, how do you get rid of them? You either give them to somebody else so that you can create new ones, or you get them blown up somehow. Well, how do you get them blown up? Well, you put them in the theater and they get blown up. And, think about what happened in 2000. And this is going to get a little conspiratorial, but I actually think it's true. Or I don't think it's untrue. Let me say that. I don't think I'm completely off base here. Let's go back to the dot-com bust in 1998. Like it was a huge drawdown in stock prices, asset prices, GDP. And shortly thereafter, we had 9/11. And shortly after 9/11, we started two wars that lasted 15 years. One of them lasted 10 to 15 years, and the other one lasted 20 years. I think Afghanistan was the longest war in U.S. history, if I'm not mistaken. And people say, well, we lost both those wars. Okay, maybe. But what did we fail on all of our goals? I mean, think about how much money had to get pumped into the economy to support those wars, right? And, how many loans got made by the banks to support that? And how many corporate profits went up? I mean, you go back and look at the stock prices of the top 10 U.S., Army suppliers. And look what their stock price did over those 20 years. And you tell me if it was a failure from that perspective. Yeah. So when I look at things from an overall basis, was it a total success militarily? Well, no, probably not. But was it a total failure? Were all the goals that they set out to accomplish unaccomplished? I don't think so. And again, what happens if you very quickly, indisputably win a war? What do? Well, you come home because there's nothing else to do. So why would you want, if the military industrial complex wants to grow and wants to continue to feed itself, why would it win quickly? And again, I know that sound, and I'm not saying that the U.S. Army is perfect. And I'm not saying that they could have won, without any hesitation. But listen, the reality is that the U.S. is the most sophisticated military machine that has ever existed in history by a factor of 10. If they wanted to beat the Houthis, if they wanted to beat Afghanistan, they could just wipe them off the map overnight. Now, that would obviously cause blowback from other parts of the world, but the point is they could do it if they wanted to. And this idea that the U.S. can't even win a war versus people in sandals, number one, I think it's horrible thing to say, and I would say talk to the mothers and fathers of the people in sandals who the U.S. has killed over the years, and you tell me if those families think that the U.S. can't exert force around the world. And so, so I think that I think that is part of what's happened in Ukraine now, right? Like, part of the reason that people don't agree with what's going on from a geopolitical perspective or just a political perspective is because I think most people are generally good people and they're not psychopaths. but the people running the world are psychopaths. They are. They're, the people that run in the U.S. and Russia and China and everything in between. They're psychopaths. They really are. You have to be a psychopath to want to be the president. You have to be a psychopath to want to be the ruler of China. You have to be a psychopath to want to run Russia. I mean, those positions are not open to just anybody. I mean, to think that you're just a nice guy and you get into that position and you last for 20 years. Why do you think Jimmy Carter only lasted 4, right? I mean, he's probably the nicest man to ever be president. And, didn't take him long before he was out of there. So anyway, I don't know how I got off on this this rant, but I do think if you want to kind of understand what's going on in the world, you need to stop looking at it with rose-colored glasses and look at it very critically and very
objectively.
It's not just objective. It's more than that. I think you got to look at it very critically and without, I want to say cynically, look at it cynically, because I think if you do look at it cynically, things will make much more sense. The problem if you think cynically too much, you actually become, I think negative thinking is bad. So you have to be able to be a cynic without becoming cynical about everything, right? And it's hard to do. So anyway,
really, what I think what you're saying here, to me, what comes to mind is it's like the idea. Big pharma doesn't cure anybody because healthy people don't make money. It's the same spinoff for the industrial military complex.
Yeah, and listen, even if it's not 100% right, are you really sure it's not 100% wrong? Right? Are you really sure it's 100% wrong? And the truth usually lies somewhere in the middle. But yeah, so unfortunately, I think we're probably headed towards more military action. And as opposed to less, and I think the military-industrial complex is going to continue to get fed.
So with that, and before we wrap up, a quick little pivot to politics. It feels still a little quiet for what this year ultimately has waiting for us in the second half. What are your thoughts so far on how some of the political environment is unfolding? And I know you've said you've had specific concerns as to how crazy things are going to get later this year.
Well, here's where I try to stay positive, even though I'm extremely cynical, and that is this election that's coming up. I really don't worry about too much, but I actually am worried about this election. Because here's the thing, and it doesn't really matter which side wins. Like, regardless of which side wins, I don't think the other side is going to accept it. And I think if I thought the other side would accept it, then I don't really think it matters that much who's the president. I kind of feel like the dice have been rolled and we're just waiting for it to all play out. And it makes a little bit of difference, but overall we're going to end up in the same place. But I just feel like, the other side's not going to accept it. And no matter who wins, they're going to say it's an illegitimate election. And, I saw this thing the other day. Here, I am going to take sides. I try not to take sides, but I am going to take sides on this one. I saw this thing yesterday, and it was again, I try to watch as much from both sides of the spectrum as possible in order not to get indoctrinated into one. So I will every now and then watch CNN. I will every now and then watch Fox. I will listen to Tucker Carlson. I will listen to MSNBC just because I want to see what they're saying. And so MSNBC had these guys on that wrote this book about rural white America. And basically their conclusion was that rural white America is a threat to democracy because these racist hillbillies out in the middle of the country who can't put a string of sentences together and think for themselves, or a bunch of racists who want to string up all the other races and return us to this. I mean, it's just so stupid. It's beyond insane, and it's so condescending. And then they wonder why Trump won. Right? They want. It's just, It's incredible. And here, the reason I'm particularly sensitive to this is I spent half my life as a white rural American, and I spent half my life as a big city urban American. And there are good people and bad people in both of those places. And the idea that, and the hypocrisy of it, and they're having this conversation as if everything is just totally normal and it's totally fine to refer to other Americans like this.
Right.
I mean, if they were doing the exact thing on the other end of the spectrum that they're accusing the people in the rural states of doing. And it just strikes me that it's just, I mean, again, whatever you think of the people in the middle of the country, they grow your food. They provide your fresh water. They drive the trucks that bring you the meat that you eat, the vegetables that you eat. You know, they pick the vegetables and they work in the fields. And the idea that these people that sit behind these desks on TV and make these comments, the idea that those people could last even a month without these rural white Americans is freaking ridiculous. So anyway, I was a little annoyed by that, if you couldn't tell.
Well, one of the things that's kind of, it's not completely as true now, but here in Australia, they have some of the younger immigration visas and policies that they have. Generally, when you come over here, it's kind of like this working visa that requires you to basically do hard labor. So everyone comes over here at a young age and they go out into these remote parts of Australia and work in the farms, and they're like, you know, getting attacked by snakes and spiders. And look, it's very homogeneous here. Almost everyone in Australia is white, but I think if you come to Australia, most likely you're going to one of the major cities, Brisbane, Melbourne, Sydney. And if all of that migration just came here, plopped here, I think it wouldn't understand the culture here. And I think there's clearly an example of that when someone is writing a racist book as if they're superior to somebody else, when clearly having, you know, no empathy or no appreciation for what they're actually talking about. So one last thing I'll say to that, which I find, you know, it's in line with all the, you know, conspiracy takes that we're having here, is, does it feel like theater? Does it feel like it's just made up to just get the left or the right riled up for their cause? Like, did someone really, really write that book thinking that?
Well, you know, that's a good question. And here's the thing is, I try to kind of stay above most of it, and I try not to get triggered, and I try not to get too upset by it. But I'm not going to lie, it triggered me a little bit. And then I got thinking, it's funny you bring this up, because I was like, well, maybe that's what they want to do, right? I mean, it's very meta, right? It's like very like you're analyzing it, but you're also a victim of it, and you think you're above it, but you're also, the reason that you're commenting on it is because you actually were triggered by it. And so, you know, but
it's all right, Brent. We love you anyways, even if you are a redneck.
Listen, I am total redneck. But the funny thing is listen, I am a total redneck, but people where I grew up, they'd be like, "Oh, you're the big city guy." Right. That's the funny thing, right?
What I want to know is, have you ever made moonshine?
No, but I've drank it.
Okay, well, that's a step.
You're basically drinking gasoline. It's basically what it is. By the way, I'm going to if I haven't done this before, I'm going to dispel another conspiracy theory while we're on the topic of rednecks. People do not go cow tipping. Nobody in the history of the world has ever snuck out and tried to knock over a cow. Actually, I shouldn't say that they never have, but it is not something that happens on a regular basis. I can tell you that.
Well, I'm glad you brought that up. We at one point we were doing Madness Edition videos where we would go completely off the reservation in terms of what we were talking about. Very, very few market factors were a part of those conversations, and we did a whole episode on your cow tipping escapade. So I'll link that in the video show notes. But good chat. You know, it's we kind of did a remake, I guess, a revisit of the Dollar Milkshake Theory and where it sits right now in the markets, and some of the other ways that idea of how the world works even applies in the equity markets. I think this was a good comprehensive, while also a deep dive. Some of the political takes were interesting. Is there anything else you want to share as we go into a week that are we due for non-farm payroll?
Yeah, we are. Next week's non-farm payrolls. I forgot about that. Yeah, it is.
So there you go. So that'll be the next big trigger. I mean, we might as well get a hot take on that. You had a pretty funny one on NVIDIA. What do you think the non-farm payroll does to both the euphoria we've seen in tech and crypto, as well as just overall what the Fed is trying to accomplish? It doesn't have to hot take. Do you just kind of have a feel for where you think this is going to kind of lead markets next week?
This is what I'll say. I don't think that March is going to be a calm month. I think we either go 5% higher or 5% lower.
And that 5% in what? The S&Ps?
Yeah, let's say the S&P.
Okay. And you have you think NFP is going to, because expectations kind of feel like on a lot of these almost like cooked, right? It's like the expectations are almost set up to either meet or clearly fail. It doesn't feel very legitimate as far as expectations go.
Yeah, to be really honest, I'm a little caught off guard because I haven't even looked at it. I don't even know what the expectations are.
Yeah, I don't either.
And that's why I'm kind of hedging a little bit here. But listen, it's a big month. I mean, we've got a Fed meeting, we've got a ECB meeting, we've got we've got non-farm payrolls. There's a lot happening.
Well, we'll come back next weekend with your take on that, and at that point, it won't matter what your take is because we'll be living it real time, and we'll get your reflections on how the market reacts to that. Everyone else, we appreciate you joining us again. Milkshakes Markets Madness, the milkshakes piece. Hopefully, you figured out if you come this far as Brent's Dollar Milkshake. We share more about that. We have a playlist called Start Here at the top of the YouTube channel. We'll help give you a little bit deeper look under the hood on that. And the madness piece, Brent, we should definitely bring that back. But I think the madness is unfolding real time enough where just these conversations alone cover some of it. And the markets piece obviously is something that we both enjoy talking about. So hopefully you enjoyed it as well. We'll see you all guys real soon. You can find Brent on Twitter at Santiago AU Fund. You can find me at John Kutsmeda. The show is at Milkshakes Pod on both Twitter and YouTube. Catch you all real soon. Oh, did you see that? I got a yaw in there at the end.
Pretty good. Maybe you're the redneck.
Maybe. Rocking the red shirt. Enjoy cash flow. Go get yourself a t-shirt at store.milkshakespod.com. See you guys all real soon. This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.